Welcome, everyone. Here it is on Thursday night, and I'm so happy to see all of you on board tonight. We've got a lot going on with different things we're going to be talking about tonight, 3 or 4 different subjects, including bookkeeping and negotiating and forecasting and some other things in between if y'all bring it up that you want to talk about. My name's Steve Carver. Our little group, we call them the Academy of Entrepreneurs and Associates. This is my presentation number 995, getting close to that 1,000 mark. Thank you for being on board with me tonight and for letting me ride around on your trip to entrepreneurship. It's been a pleasure so far. Looking forward to learning more about your businesses. As you share information with me, I, of course, try to put it together in some type of package to help you, show you how to better market your business. But I'm not a lawyer, I'm not an accountant, not a CPA. I'm here offering free advice. And best advice I can always offer you is get a second or third opinion before you make an important decision affecting your business or your personal security, financial or otherwise. And a good place to get advice and bounce your ideas off of someone who knows what business is like is at your local small business center. Tonight we're sponsored by the one at James Brunt Community College in Kenansville, and John Hardison is our director, who does a real good job helping folks. Encourage you to make an appointment with John, stay in touch with him, or let me know and I'll try to put you in touch with a small business center near you. Certainly do that. Madison, I still haven't heard from the person I was getting in touch with, so I'll go to another center tomorrow and get you hooked up with them. But John is a great counselor. Here's his number and his address. Several of y'all are in the Dublin County area, so I invite you to give him a call. Use your chat button to ask questions. Let me know if you want me to send you something, or if you got some study guides that you would like to ask about. Use that chat button, type in there, and let me know. All right, let's focus on what we've got going on. Those that have been in touch with me, we'll do a quick look over. I hadn't heard anything new from Lisa lately, so what we talked about tonight, but she's well on the way. Thank you for being with us tonight, Lisa, and all that you're doing, and for your vision statement. It came in handy. Katrina is being with us every now and then. She's able to log in. Sometimes she comes on board on Thursday night, so she's doing good with her on-site sales. Madison is well on the way with his business. Congratulations for all that you're doing. Keep up the good work. Sent us a really great mission and vision statement and core values. Really spot on. Thank you for sharing those. I like everything that you wrote in there. Some of it I didn't really understand, but people in your business, I'm sure, would. Talking about the types of services that you're providing. Tierra is with us again tonight with Lee's Boys Transport. He's over in the Knoxville, Tennessee area, riding along and also joining our class. So thank you for being so loyal and diligent to stay with us, Tara. I'm looking forward to meeting you personally and seeing if we can help you get your transport business running even better than it is now. Thank you for the mission statement that you sent in and your core values. Very well written. I'm proud of you. That'll help you have a better company if you stay to those values. Julia's not with us yet, but she's got her dog treat business up and running, and I was able to buy some of her dog treats from her. And I want to tell you, they are excellent with maple syrup and with strawberry jelly. Just kidding, of course, but my dog Otis loves those biscuits that Julia is making. So if you've got a pet that needs some biscuits, give Julia an email and get you a little $10 bag of biscuits for your favorite dog. They're really good. And Otis says, "Bye, thank you, Julia. Thank you." Patrice, congratulations on all you're doing. I know you're going to be a great travel agent, and we're going to try to send you all the business that we can. Wouldn't it be great if we all could just get together with Patrice and take a trip sometime just after Christmas, and when the weather's getting icy and cold, we'll go down to Jamaica, and she's at her website. She's got the prices for everything. So if you know a group or you and your special person want to take a trip, give Patrice a call, and she'll help you get a great deal. Alicia's been with us a couple of times, hadn't been back, but she knows her business. She's in the HR business, helping employers that have lots of employees. I was especially impressed with her website, the way she used colors and great graphics and style. You can just tell there's quality there, and a lot of thought went into it. So looking forward to meeting and learning more about Alicia's work. And most especially, we got Beth on board with us. Let's everybody give Beth a hand. She's moving right along. She is our poster girl for videos, because she's allowing us to use her business and show how you can take the information you've got at home, put it in a video, the video part plus some pictures and some other information, and actually design a pretty decent ad that you can put right to work on Facebook or TV if you wanted to. Put together an advertisement, marketing promotion for very little money. I was able to take what Beth sent to me, and my associates helped me add it to Beth's video to put some look and hook in it. So y'all remember how it was, but Beth has sent us some great pictures. So number one, now you're kind of wrapping it up. So we need some good pictures. You need some good pictures of yourself. If you don't create a personal relationship with your customers, and all business gets back to personal relationship, get yourself some good photographs with some good colors that come across good. And Beth, it's just a great photo here with the basic information, and just done a great job. Well, by golly, if I don't lost that video again. This is so disappointing. I got her video all up and running. Let's see if I can figure out how to play this thing right here for a minute. Forgive me. We're going to figure it out. See if I can bring it up. My people put a lot of work into this, and I definitely wanted to show you. Okay. Y'all get to see what you do when you get a curveball in the middle of a presentation. All right, I got the link.
Beth Olmsted is your better health advisor. Olmsted is.
So let's see if I can figure out how to share this. So somebody tell me if is Beth's video showing up now?
I don't see it. Does anyone else see it?
You don't see it?
No, not yet.
Tag on it. Well, we got it on. What is showing? Is my PowerPoint still showing?
Yeah, that's what I see is your PowerPoint.
All right. Now tell me when
is your better health advisor and coach.
Is that up?
I can hear it, but I see your folders.
We don't keep working at this. I don't stop. Okay. No, go back and share now. How about now?
Yes, that looks right.
All right, let's give it a shot. That is such a lovely picture.
Call or email today to begin your journey to better health with Beth.
Hi, I'm Beth. I'm the Honeybee Health Coach. I am a registered nurse that provides chronic disease education and health coaching to help you reach your health and lifestyle goals. Also, as a beekeeper, I find that the hive mentality of everybody pitching in and taking care of each other is really important and something that healthcare should strive for. I look forward to working as a team to help you reach your health goals. Take care.
Call or email your Honeybee Health Coach today to reserve your online appointment.
So Beth did 99% of the work here in getting her ad ready, but she sent it over to me, and I gave it to a couple of my virtual assistants and asked them to add some music, an intro, a voiceover, so that when Beth came on, people would be ready for a presentation. To add a few photos in the video, and then at the end to give a message of the look in the hook to encourage someone to call right now. So you can take a simple video that you're doing on your telephone or your computer and work with a videographer who can do amazing things for you and go as far with it as you'd want for very little expense and time. So notice now that what we've added are music. So turn your sound up. Added several photographs as we go along, and the voiceover intro.
Beth Olmsted is Better Health Advisor and Coach. Call or email today to begin your journey to better health with Beth.
Hi, I'm Beth. I'm the Honeybee Health Coach. I am a registered nurse that provides chronic disease education and health coaching to help you reach your health and lifestyle goals. Also, as a beekeeper, I find that the hive mentality of everybody pitching in and taking care of each other is really important and something that healthcare should strive for. I look forward to working as a team to help you reach your health goals. Take care.
Call or email your Honeybee Health Coach today to reserve your online appointment. Beth Olmsted.
So there you go. That's what we're talking about doing, and I am so happy that Beth, you've let us work with you to be able to show the other people, you know, what all we can get done.
Is your Better Health Advisor. Call or email today to begin your journey to better health.
Boy, I am a dunce when it comes to some of this stuff. So give me a moment. I'll figure out how to get back to where we're supposed to be. Thank you all. All righty. Get to read all of our email and all that stuff. I know y'all sitting back there giggling at me, so it's okay. I can take a giggle. Now let's see if I can get my PowerPoint back up. I don't know why it didn't come up the first time, Beth. We had it all logged in, and I practiced 2 or 3 times, and it's called one of those glitches, I guess. At any rate, the video now hopefully would catch somebody's attention a little bit better and also start making money for you. If you don't take time to do this, make sure you put some sign of a look and hook in it so that indeed customers will be more apt to give you a call. That's what we're trying to do, is to get them to call you. I think part of my problem here is I'm using the reading view on here instead of the right one.
You may need to stop sharing your screen again and then share with where I can be helped you.
All righty. Have I been showing y'all way too much? Okay, and tell me if we're right now.
Yes, back to the PowerPoint.
Okay, drill skills are up. Okay, well, I'm going to give Beth a great big hand and give all y'all a hand for putting up with me. I certainly didn't get one, but during all that, Rhonda came on board, and Tisha came on board, and 2 other people did. So Catherine came on board. Did y'all have trouble signing in? Did you have trouble signing in, or came in okay? Tisha, Kathy, Rhonda, did you have trouble?
Yes, I did.
Did you really? Well, I'm glad you made it in. We got some trouble doing that, but thank you for being persistent. Okay, we're gonna move on now with the drill skills. We've gone through them every week so far. We're gonna wrap them up in a hurry because what I want you to do is to almost commit these to memory to the point that you're familiar with them and you can use them every day. One of the ways to get an extraordinary extra service award for this course is for you to take these drill skills, make a word file, and in your words, right under what I've written, in your words for each drill skill, tell how you think it would affect your business or what the words mean to you, or kind of like in other words. If you'll take the time to do that, it'll help you hold on to them a whole lot better. Number one, what's that business plan for? What does it do? It tells you what's left. Number two, that marketing plan, what's next? 3 kind of profit centers: bring in new customers, traffic builders, repeat business, and big ticket sales. The RLC is a raving fan customer, and NDCP is no demand, change the plan. And tonight we're going to always be connecting the dots because it's all about all this making sense and working together. By the way are the 3 most important words to help you get upsells and cross sales and stack profits. By the way, next tattoo you're going to get. If you're going to catch fish, you put fresh bait in the water. If you're going to catch customers, you keep sending out constant promotions. And just like Beth now has a great promotion, she can start emailing out to her customer base. That's a good way you would use that. And now she's got 60 days to make another one, maybe with a different subject matter, so she can send it out in 60 days and have something fresh bait for her customers. What's the best way to find customers? Help them find you. Our business can't be all things to all people, but it must be what? Everything to some people. Look at the person next to you and say, everything to some people. That's what it needs to be. Don't pay off your long-term debts with short-term cash flow. Why? Because you'll go broke, period. Marketing is the big picture. Advertising is focused and targeted. It's the small picture. That marketing budget will always be larger than your advertising budget. Who's your toughest competitor? It's the distractions in your life. What's the best way to fight those distractions? Set priorities every morning. Now, I'm going to tell you, if you're not doing that, give it a try. Before you get out of bed in the morning, name 3 things that you're going to try to accomplish before lunch as you're kind of on your to-do list. And get up, have your coffee, go to work, and really work on getting those 3 things done first. But you fight distractions, and it works. It'll really help you. Before you know it, you'll be able to get 6 things done. Now, there'll be some days that the distractions hit you right to begin with, and it don't work, but most of the time it will really help you. What's the definition of fair market value? That'll be on your quiz. I want you to kind of be able to say it from memory. L&H, make sure your ads have a good look, just like with best ads, great looks, and with a hook in it now that's encouraging people to call you. That's why we need that voice at the end to say, call her now. And Beth was able to give her introduction, and then at the tail end, the voiceover was able to kind of prep it up and try to get some motivation in it. Do you want positive cash flow? Black ink, of course. Do you need to stay away from negative cash flow? Yes, but it always needs to be on your mind. What are you doing to improve cash flow? I had to make a decision today for my winter marketing plan because the spring that I'm going to have next year, the spring that you're going to have next year, January through April, will have a lot to do with my marketing and investments that I start right now during November and December and January. So I had to make a decision to obligate about $2,000 in marketing money that I'm going to spend, even though right now is a bad cash flow time for me, but still you have to make that investment so that your seeds can grow next spring. So always know you've got to be looking ahead, forecasting, which we'll talk about tonight a lot. If your plan is take it or leave it, you're in trouble. Make sure that when you're talking with your customers and you're developing your menu of products and services, that written into those prices are emphasis that will encourage the customers to talk to you about it instead of leaving it. The 3 times rule will help you price products and services when you hadn't done it before. We'll talk about that in depth at some later seminars in our next course that we're getting ready to start in a week. Same thing for the 27 times rule. Yes, if, no, but negotiating, we'll talk about tonight. The mobile page, we've already talked about how important that is for your business. It's the most important page for your website, and the landing pages are the next important ones. Customer service is 40% of the reason people come back, but 60% is all about hospitality, how they feel about doing business with you. So tonight we're also going to mention nonverbal communications and how important it is that you're able to read them and to send them. There's 2 edges here. One of your basic business skills in closing deals and understanding what your customers are saying is be attuned to nonverbal communication. It's time as a business owner, as a manager, as the person in charge of sales, we got to be assertive sometime. And I know that some of you ladies are just as nice and peaceful and courteous and laid back and wouldn't do anything to try to push somebody along. Well, get over it. If you're in business and you don't motivate people, sometimes you have to learn how to do it in your own way. But folks need a little shove, and we can do it very, very nicely. I'll give you some tips on that next week. Tax avoidance is a must. It's not only a good thing, it's a must. Tax evasion is awful. It's evil. It gets you in trouble. We want to know the difference. Next week, we'll get into that in depth. Doesn't make any difference how many times you get knocked down. It's all about getting back up. And entrepreneurs will get knocked down a whole lot. As a matter of fact, as we know, 9 times a customer has to hear a presentation from you before they consider doing business with you. So that means you got to get up 8 times before you don't get a yes answer from your customer. That seems over dramatic, but it's not. Sending emails, staying in touch, it's not easy selling. It's very rewarding, of course, but you have to keep getting back up. It's not how if you come in first in the race is not what I want you to be thinking about. I just want you to finish the race. In entrepreneurship, finishing the race is winning. So keep that in mind. Is your legacy going to be that of a giver or a taker? That's going to be up to you. You got to hold your candle up and let people see it shine. I know all of you have warmth. I know all of you want to do good. I know all of you will help other people, but you got to let your light shine. You got to be the one that projects that very positive image. In week 3, we talked about marketing and the magic marketing moment. We have to hold on to that because to make your marketing campaign work, the magic marketing moment has to come into play. To have a raving fan customer, the magic marketing moment has to come into play. And that is when you have that chance to close your deal and talk with your customer and make sure they're satisfied. When you say, now, what was it you said you were going to buy next? When is your next purchase? Who is it you know that I might want to call? That's when you do your prospecting. And the prospecting is making your list and planning your marketing campaign for the future. So your magic marketing moment is how your golden goose marketing campaign tells you what's next, so you know your business can remain sustainable. Videos, videos, videos. Every customer wants to think that you will leap to be able to acknowledge and welcome every customer. Not just to say hello, but to leap, to be happy that you have this opportunity. You got to keep your radar turned on to the next selling opportunity and the next hot thing. Remember, I just told you that I worked hard today on how to spend several thousands of dollars on what will be the next hot thing. What do we need to invest our money in and our efforts to be ready for next spring? Now is the season to do that. Structured forecasting is imperative for your sustainable future. Tonight we're going to talk about that in depth because I want you to know that Murphy's curveballs are coming at you. There's pitfalls around the corner. There'll be some unpleasant surprises like your PowerPoint goofing up on you, and there will be some unexpected expenses. So we're going to talk about structured forecasting to help you get through those. How are you going to be the very best negotiator that you can be? It's going to be extreme preparation. It's going to put you at top and in front of everybody else. Negotiations don't happen by themselves. It takes a lot of homework and a lot of preparation. We'll talk about that in depth later on. People don't really care about how much you know, but they do care about how much you care. And being afraid to show how much you care or that you are really sincere about caring about someone, try to get past that. Try to share your empathy with your customers. It will turn you from someone that they have anxieties about, don't trust, but if they can look into your eyes and see there's caring there and they share that same logical thinking point, you have a great chance of creating a positive business relationship, a long-term raving fan customer. They don't care about how much you know, so trying to be a know-it-all and say everything as you know-it-all is not the way to go because we're learning. Just like Beth was able to help me learn an important lesson that I've been misteaching for a number of years or because I didn't complete the process. But with her help, I'm going to be a better teacher. So I'm proud of what she does and helping me a lot as well. Why should employees really care about your dreams coming true and what you want if you don't really care about their dreams and what they are really working towards? That's called the dream manager concept. And we'll talk about that a whole lot in a couple of weeks in a special presentation. But we need to care about our employees. I was able to have such a great group of employees. I averaged maybe 25 average all through the years that we've been in business, 25 employees at a time. And when I sold my business 15 years ago, the 17 employees or thereabout that were still with me, the average term of employment for that 17 people was 25 years. 25 years average, which meant that some of them had been on board for 45 years and some of them less, but the average was 25. Very proud of that. And every one of them stayed on with the new owner for a little while. They were glad to do that. So you got to care about those other people, and they got to know it, and you got to build it into your business plan. Integrity cannot be compromised or replaced. We got to be careful not to let charisma become a substitute for character. Now, we see that in our politic world all the time. Politicians are all about charisma. But we have to look deeper and try to find character if we want to associate ourselves with someone you're proud of associating yourself with. As a business person, you need that charisma, but you also don't want to let it overflow or be a lot of icing over an empty cake. The customers need to know that you've got that character in there too. Well, how do you do that? Your mission, vision, and promise statements are the best way to let that light shine. You can have all the charisma you want, but those statements will bring out what you're promising character-wise. That's why they're important. That's why to get extra points and credits, I want y'all to do that so that you'll be proud of yourself. And over half of you have already done that, so congratulations. Lastly, you need to kind of remember now you're the boss. You don't have your own business. You don't have your own employees now. And we need to kind of remember, as I do, employees almost never quit their job. But they will lots and lots of times quit their boss. So are you going to be a boss or are you going to be a leader? A leader doesn't need but one thing to qualify himself as a leader, and that's a follower. A boss is a taskmaster. A leader has followers. We need to be leaders in our business. We don't want our customers, our employees quitting us. Now, maybe they can't handle the job that you've got for them, and I understand all that. But keep in mind that your very best employees, the ones that you really want to keep, lots of times they're not going to quit the job. They're going to quit their boss. So keep that in mind. That's number 40. That's the end of the drill skills. It's up to you guys now to read them, rewrite them, put them to work. So let's get back in the game. You are the quarterbacks of your business. Cheryl, Tanisha, Beth, and Madison, y'all are the quarterbacks of your business. Patrice, you're the quarterback. So I want you to get out of the stands and get in the game. Come on down on the field and get in the game, because it's time to start. It's time to start marketing. We're right here wrapping up our series, kind of 1 week away from wrapping it up. You got lots of homework items to do, lots of things that you can do. I haven't seen a business card. I haven't seen the first business card from any of you guys yet. And we talked about this in week 1. I'd really love to see some business cards. I'd really love to see a few more pictures. Half of you are sending me some pictures and a lot of good promise statements. It's time to get those videos in and start getting to work on them, okay? Think about your testimonial statements. As you get customers, then we can put those together. Your Academy quiz, I sent you the quiz with the answers this week. I want you to read those, and next week I'll send you a quiz with blanks, and I will ask you to move the answers into the blanks and send them back to me. I want you to type them in or cut and paste them, whatever is easiest for you, but take the time to read them as you're doing that, and by golly, you'll learn them, and that's what I want you to do, okay? But I want you have to send that quiz back to me. When you send the quiz back to me, make sure it's got your name and your mailing address on there. Your name the same way you want it to show up on your certificates, and your mailing address is where we'll mail those certificates to, okay? All right, we're moving now into the subject matter. Let me get a little water. We're going to be talking about 3 basic subjects and a lot of wraparound. We're going to talk about the basics of bookkeeping first. Then we're going to move into forecasting, the critical business skill of forecasting, and then into negotiating. You got some handouts tonight now, and several of them are related to forecasting and negotiating, which are talking about the 21 different tactics for negotiating, body language, and nonverbal communication. So those are really good study guides that I hope you will read them when you have a chance, or at least now keep them in your business journal, because someday you will want to pay attention to them. Bookkeeping. As business people, business owners, you and I are always interested in our cash flow, and knowing that means that we have to remember where our profit and loss is coming from. What's creating positive cash flow and negative cash flow. And we've got our business plan, which if the plan works, it should work. But where is the accountability? Where do we find the accountability of our business plan? It's in our bookkeeping system. So because that bookkeeping system is going to watch your business every single day. Now there's 2 folks that are involved in the accounting processes at your business. One is the bookkeeper, and the other is the accountant, the CPA. The accountant is not the same as the bookkeeper. However, you may have someone doing both jobs, but very seldom is that the case. The accountant's role in your business is to look at the big picture, the annual picture, or the many years picture, and to look over the bookkeeper's work, kind of look over their shoulder. They're interested in annual financial statements, tax returns, the big picture, things that are affecting the stockholders and the officers, their personal interest in the business and such as that. That's the accountant's role, and we're not talking about them tonight. The bookkeeper is interested in what's happening daily. Now, we got Lisa on board with us tonight, so she is our resident expert. Thank you for being on board, Lisa. And I think she's sitting through one or two of these, this particular part of our session. So glad to have you on board, and you can correct me along the way when I make a flub dub, okay? So, business. The bookkeeper is looking at your daily financial transactions, the posting of debits and credits, producing invoices and recording them, maintaining ledgers, and usually the payroll services in a small company. That's what the bookkeepers, generally their functions are. I used to say to folks as I was talking to bookkeepers coming in, talking to them, you got the easiest job in the world because all you have to do is start out with 0 on a piece of paper and go all the way around your little cycle and come back to a 0. So on your handout, if you've got that, see where my cursor is here? Put a 0 right here, right after the S in transactions, and over here put another 0. So what we're going to do is take apart an invoice, a sample invoice, and go all the way around this circle, putting in numbers and talking about what they are all about and adding and subtracting, seeing what the balances are. And all these numbers we're going to add and subtract and take away from. We don't start out with how much money we are dealing with for the whole day. We're going to take all those invoices apart and come back around and put them back together and still end up with a 0. For example, if we're taking in $1,500 up here at the beginning of the day, that was our income for that day. Then at the end of the day, I want us to show where we took $1,500 out, put it in the bank, and ended up with another 0. That's my logic. The most simple bookkeeping methods that you could look at. So, has this got anything to do with QuickBooks? Sure, because QuickBooks is doing all this stuff internally and fast, and it's got charts and such as that ready to do it. But the business owner, Tisha and Denisha, it is important that you understand the basic logic of why we're getting here, and I'm going to show you why now. So bookkeepers, their tool belt is full of charts of account, account charts, numbers, because each type of transaction is going to be given a number or a chart of accounts. In your chart of accounts, usually assets are your 100 series numbers, like cash in the bank is 101, merchandise maybe 102, 100, 199. Usually your 100 numbers are your assets, black ink. Your liabilities, which is money going out or money that you owe, is generally your 200 accounts, and they would be your red ink, of course, because that represents a deficit. Assets, black ink, liabilities, red ink. Assets, 100 chart numbers, liabilities, 200 chart numbers. Then all other things might have different chart numbers. Usually they start with 300s, things like your owner's equity, dividends, things that really the accountant is dealing with more, but still the bookkeeper has to feed those particular accounts. So every business, every QuickBooks system will have their chart of accounts, and every one of them will be different because people set them up different. But folks like Lisa will be able to come into your business and help you get your QuickBooks set up. That's what she's training to do, and the services that she's going to be able to provide as an expert. She would be able to come into your business, get a fresh software. She'd recommend the right QuickBooks software for you, and then help you get your book set up and name these charts of account basically on what you need to know. It's important now that you start paying attention on what you need to know, because QuickBooks has been a disservice in a way to small businesses. Yeah, it has really reduced the cost of bookkeeping a lot for a lot of small companies because it does it quickly, it does it not manually, so you don't have to have someone laboring for several days to do what QuickBooks can do in a couple of hours. But because of this, the business owners now think about bookkeeping as a report that the QuickBooks person is going to give me once a month. the report for taxes, what I owed for this, what I need to do for that. It's just that report for paperwork that I don't need to fill out or checks I don't need to sign. Well, that's always been the case that we needed that information from QuickBooks. But here's the beauty of QuickBooks. When Lisa or someone else sets up your accounts, you can ask that your software give you reports on a daily, weekly, monthly basis, showing you where you are in cash flow compared to other times, showing you where you are in profit or loss issues with different profit centers. And that's why I wanted to have this session with you, because now as a business owner, you can get more and more really good information on how to handle your sales and marketing, forecasting, and pricing campaigns from the information that the bookkeeper can give to you. That's exactly right. Because of electronics now and QuickBooks software, you can get a lot of good management tools. So let's talk about the basics now. Here's a chart of accounts for maybe a building supply company. The basics in bookkeeping are, remember that we have invoices. Invoices are a record of a sale. And invoices are always numbered and they're always dated. The numerical numbering of an invoice, 1 through 1,000,000, is really, really important, because that allows you to go back and find an invoice in a hurry. If a customer knows their invoice number, you can find it quickly. If a customer knows the date, because you're going to keep these in a record, chronological and numerical, so that you can, if the customer knows the date, you can go back. Or if you want to know what happened on a certain date, you can go back. So here's a picture of one of my invoices right here. Let's see here. All right. Up at the top, of course, is the name of the customer, the invoice number, the date, and how much the invoice is for. So I print these out individually, and then I send a copy of that to my bookkeeper, who enters them into QuickBooks. Now, I could be doing that entering myself. I choose not to at this point. But once your invoice is in, then if you look at your chart over here, you're able to see what's going on and break out the different items that are important to this individual business person. Now, let's say that we are all in the gift shop business, and this is a sample invoice where we sold some candles, okay? We're in the gift shop business, and we sell a lot of candles in this business, and we ordered in several cases of candles. So this is one invoice. Now, on a day's work, your store may have 3 invoices, or it may have 300. In my business, I've had as many as 300 invoices a day. Back when we were selling lots of parts to harvester owners, we had lots of people come in. So our bookkeeper would have a big stack of invoices every day to work through. And let's just say this was one of them. First of all, your invoices don't have your number at the top. Notice that's 12, 12, 16. And a little hint here. Sometimes companies will just number their invoices by the date. So that invoice number right there would be 12, 12, 16. Tomorrow, the invoice number might be 12, 13, 16, as if it's December 12th, 2016. But on this particular date on invoice, we sold a box of candles. Now, let's say that Cheryl sold this box of candles. Cheryl, you're going to be our clerk tonight, okay? Thank you for volunteering. So here we go. She sold this box of candles for $8.56. North Carolina tax is 7% of that, so 56 cents of this was tax. Is that your money? No. We're collecting money for the state, and we don't ever need to pretend that that's our money. As a matter of fact, I'll tell you that's something we got to do, is to pigeonhole it. But so we're going to set that aside first. Take that tax out of the picture, put it over in the tax account. Now that leaves $8 from that sale. So our sales revenue is $8 there. That box of candles cost us $2. So we don't note that. We had 55-cent freight on that. We're going to note that. We're going to pay Cheryl 10%. 10% of her sales today. So Cheryl gets 80 cents of that sale. So why aren't we giving her 85 cents? Because you don't pay commission on taxes, okay? Just got to remember that. But Cheryl has just earned 80 cents. Congratulations, Cheryl. Now, we also have a customer loyalty campaign in our Golden Goose marketing campaign, where we will assign 5% of our sales back to customer loyalty. So we're going to take 40 cents and set that aside. We determined in our business plan that we're going to set aside 6.5% for marketing investment. That's right, because we decided when we ordered these candles, we were going to spend 6.5% of that money, and we've already spent it. But now, as we make these sales with good bookkeeping, we're going to be able to determine how much of that marketing investment we're getting back. If you want a return on investment, you have to make an investment. So that's 52 cents came in. So all this adding up says that that box of candles cost us, or we're setting aside for paying for it, $4.27, which is 53% of the sale amount. Now, is that 53% profit? Remember what we were talking about before? No, that's not profit, that's margin. That's margin. But 53% margin, no, that's the cost. 47% is the margin. $3.73. Well, let's take a look at that right now. We can glean a lot of information here. First of all, if I'm going to make $100 selling candles, I'm going to need to sell a lot of boxes, aren't I? I mean, right away here, I can see that I've got to sell about 30 boxes of candles to make $100 margin. Not profit, but margin. So if one of my profit centers in my business plan was candle sales, and I had over there that I was going to make $100 a month selling candles, I would know right now that I would need to be selling at least 35 boxes. That's how you do your forecasting and your judging and determine how much stock that you need to do. So what do you see here now? First of all, we notice that that's pretty good margin. And we can keep up with what we're doing with our bookkeeping system because Lisa can make this system tell you how much of this money could go towards each one of your accounts and how you're rocking and rolling. If you had planned to do this and you were selling candles last year, your bookkeeping system would know how many candles and how much profit you made on them last year. And by pressing a button for your reports or setting it up for a report, every month you could get a printout saying how your candle sales are doing versus last year. And maybe you need to market some more, or maybe things are going well, or maybe something's just haywire. But because your bookkeeper can give you reports, then you don't have to wait till the end of the year before you start making adjustments. Adjusting all the way through. Remember NDCP, no demand change to plan? That's what this is all about, letting your bookkeeping system help you. So here we go. We take those numbers that we were just dealing with and we plug them in. That's our journal entries. We start plugging them into our journals or onto our computer screen into the different charts of accounts. The process of doing that is called posting. We're breaking the invoices down and we're posting them. Once we get them all posted, we're going to hit a button and see if all the big numbers, if all the small numbers add up to the big numbers. Because when we take this thing apart, we should be able to add the little parts together and come up with the right number at the bottom. And as we're doing that, we'll have what we call a worksheet at the bottom in a paper ledger, and we'll be keeping notes and working it out, because the trial balances oftentimes will not come out right. Now, Cheryl is a great clerk, and she does great work, but she was distracted somehow or another. And instead of collecting 56 cents tax on that box of candles, she hit 76 cent tax. So she collected 76 cents on that box of candles. Well, it's the bookkeeper's job to find those little errors like that and make a note on them, because we don't supposed to have 76 cents there. We're supposed to have 56 cents. So in the worksheet area here, the bookkeeper will make a note, will back out 26 cents there, or 20 cents that was too much. She'll make a note that that was an overcharge in taxes, and make a note there. And that note that she's doing there is an adjusted journal entry. And this is maybe the most important words I'll say about this circle, because the adjusted journal entries are the bookkeeper's get out of jail card free. You know, when you're playing Monopoly, you can get a get out of jail card. Well, that's what adjusted journal entry is about. Because down the road, when audits come, and they always will come at some point, and if you ever read the paper, listen to the news, the first person that gets the fingers pointed at them are the bookkeeper when money's missing or there's a problem. Well, the bookkeeper will rely on those adjusted journal entries to be able to show every time that the books were cooked a little bit, there was something weird going on, and the better those journal entries are, he or she can get off the hook because they have kept good notes. Now, you have to keep these notes. So I'm going to mention to you right now, you want to encourage your bookkeeper to keep the adjusted journal entries not only with the regular paperwork, but they want a copy of them as well. And maybe you, as the owner of the company, want to make sure that you've got a good record, a good way to retrieve all your adjusted journal entries, because that's where your focus is going to be on when the auditors come. Okay? And it might come 5 years later or 3 years later, and it is tough to dig back in all your books and record keeping. How in the world can someone remember 2 or 3 invoices when they're doing 200 or 300 a day? Can't. But that's why that date and those invoice numbers and the adjusting journal entries are so important. Those are important records to keep. Financial statements now, after we make the difference, get everything back to zero. You fix that tax number so that all the numbers are in balance. And when the numbers are in balance, that is the financial statement for that day's work. Every day you have a balance statement. And once you have that balance statement, you can close the books. Now remember, we had a zero over here at the top. And when we added up all those invoices, we took in $25,000. Cheryl, you had a big day, took in $25,000, more than you started with. We've closed the books over here, and it shows a $25,000 increase in our cash drawer for that day. Now, some owners do it different. Here's the way I did it. I'd have my bookkeeper to close those books out, show me what the income was, and to automatically do a bank deposit for that amount, right to the penny. $25,316. I wanted that bank deposit to be the exact same as our income for that day. Then our records, we could match them up very easily and go all the way through it. And I could indeed help see how my cash flow was working, because she would be doing the same thing for money going out. Same type of chart, showing me the checkbooks, cash flow going out, have the same thing. And indeed, if you have X amount of dollars going out and X amount of dollars coming in, you knew where you stand cash flow. That's the most simple way that I know that a small business can do it and get started. A huge business probably couldn't do it this way. They'd have to rely on a whole lot more electronics. But a small business just getting started, you can kind of do it yourself. I hope this helps you. It is a system that I used for over 50 years. My dad used it before I did, and it works. It helps you manage your business quite well. What else can a bookkeeper help you see? Bookkeepers can tell you the percentage of money that you're spending on this or that, and then you can compare that with other companies in the same business you are in. If you're in trade magazines or associations, you can see how your business is running along compared with other businesses. QuickBooks can do that for you. They can also give you a variety of different charts that you can rely on. Payroll, the payroll bookkeeping payroll lady or gentleman, 2 things to say about that. Make sure that you have bought a bookkeeper in, and now you're seeing that they are also your receptionist, your person that goes to the bank, your person that goes to the post office, the person that entertains people sitting down in the lobby while waiting to see someone else. Because if your bookkeeper and payroll clerk are doing all these other things, remember the word distraction, that I wanted you to fight those distractions? Well, you got to fight for your bookkeeper now. You got to fight for your payroll clerk, because they need some quiet time, a quiet place to concentrate and work. Because if they're trying to do all these numbers that have to balance, and the phone's ringing and people are coming in and out, it's hard to do. That's one reason why virtual bookkeepers and payroll folks have a kind of an advantage of the in-house person, because they can focus on their work. So I made a mistake through the years in that my bookkeeper was doing all the other things that someone needed to do in the office. And she came to me one day and she said, Steve, you'll save money and have less stress, and I'll have less stress if you'll hire a part-time person to come in here in the mornings from opening up time till noontime to answer the phone, go to the post office, do the deposit, this and that, and let me sit over in my office and close the door and do your bookkeeping and payroll work. And I said, well, how am I going to save money by hiring someone new? And we're getting along all right now. She said, because the accountant looks over my shoulder. And when I have to call them to help me sort something out, and our business was really growing then, we were having lots of invoices a day. And the bookkeeper was putting in lots of overtime because of all this work. She said, between my overtime and the extra money we're paying the accountant, you'll come out way ahead by hiring that part-time person to let me do my job like you're paying me to do it. I made the change. I took her advice. We made the change. And in the long run, we ended up bringing not only in a part-time person for in the morning work, but a full-time person all day long, because our business was growing and our bookkeeper needed that time to get that job done right and to give me the reports that I needed, and took on some more responsibilities that were more important. Just keep that in mind. You got to help your employees fight distractions just like you do yourself. Again, if you need some additional information or study guides, go to your chat board and write it right in there. Well, there we go on bookkeeping. How'd we do, Lisa?
It was very good. I was just, taking my notes on everything that you were saying. And, I mean, that's exactly the type of work I've been doing, straight along with, doing all of the financial statements at the end of the month and, right, providing the balance statement and the profit and loss. And, I know now, with QuickBooks, you can go and look at the company profile, and that should help business owners, because you can see all of those things that you pointed out and see how the business is doing, like in a snapshot. And one other thing I was going to say is, as far as the duties go for any kind of bookkeeping role, there is such a thing as a separation of duties, and it's not that it is always the case, but it has been at sometimes. If somebody is recording and they're also writing the checks, there's that opportunity where somebody can take that and they can steal money from the company.
Absolutely. That's a very good point. And I don't get into those security issues about double signatures and double duties, but that is a good point. Thank you for bringing that up. I'd appreciate if you drop me a note about adding that to this presentation, because I need to. And that's a very good point. And any other tips that you might have. Thanks for your input.
Thank you.
All right. Okay, you ever play chess? I enjoy playing chess. My friend Marvin Cox and I play chess down at the campground at White Lake every weekend. And it helps you get your mind off everything else and challenges and have fun doing it. Now we're going to get into some things that in business are so close to playing chess, it's incredible. And I want to talk to you first about this forecasting. We're all familiar with the term forecasting, because first thing in the morning, a lot of us turn the TV on, and that's what we want to hear is, what's our weather going to be today? How do we need to dress the children? What do I need, an umbrella? I need a sweater or a coat, or can I wear shorts today? So forecasting is on our mind all the time, but now as entrepreneurs, it's going to be on your mind a different way. And I want to nail this down as heavy as I can for you. Now, hey, how about it, Patrice? You reckon the forecast is important to your folks going on cruises? And Denisha, you know that forecasting is going to be important for your business. And if you're a farmer, hey, you want to make sure those calves are born at the right time of year, that the grass is green and the weather's warm, so those new baby calves won't be freezing out in the pasture. Forecasting is really important for the herdsman. And if you're in the firefighting business, my son works with U.S. Fish and Wildlife and fights wildfires all over the country. One of his jobs when he wakes up in the morning is to see where lightning was striking during the night, because they know that if they get a certain number of lightning strikes at a place that's got a real low humidity and high temperature, there's a good chance there's a fire already burning that hadn't been reported. And they'll go to those places and see if they can find a fire that's small before it turns into a big one. So forecasting is used all over the world and with all types of businesses. But here's what happens in our type businesses if we don't learn to forecast. This is the sign that comes up, and this is a marketing sign that none of us want. Well, unless we're in the going out of business. That's a pretty good business to be in, actually, to help other people go out of business. How about that? But that's what poor forecasting can do for you. So how do we apply it? You'll use forecasting in determining the number of turnovers that you're going to have with your merchandise. You can't make profit until something turns. Makes no difference how big your stock is. It makes every difference how often you're turning that merchandise over, because when it goes up and goes out, that's when you got the profit. If it don't go up and out and you don't get paid, you didn't make any profit. So forecasting inventories and sales is all boils down to turns, which is turnovers. So make a note of that. What in your business can be affected by turnovers? Staffing issues, of course, are critical, because if you're understaffed, you're going to get a bad reputation. If you're understaffed, you can't keep up with your demand. If you're understaffed, people make more mistakes and customers are not 100% happy. So forecasting your staffing needs before you have that grand opening or a special event is very, very important. Now here's a little parallel you'll find interesting. You got staffing needs, but it's just you. I've got staffing needs, but it's just me. I need to be out there selling over here and over there and over yonder, but there's just one of those Steve-O. Beth needs to be getting her message out all over the place, and Madison needs to be getting his message out, and Patrice does too. How do we do that? We can't afford a bunch of employees right now. Videos. Videos is how we do it. We can put our individual faces and sales pitches out all over the world in people's phones and in their PCs all over the United States, and have a sales team of 1 million people, 1 million views, giving your message. That's where videos really pay the dividend. So forecasting staffing needs, it might be the same thing as staffing needs. How many numbers of videos do you need to have out there? All right, we need to bring in some material. We got to buy material. That means our cash flows don't go down. So I was talking about having a lot to sell in March and February. February, March, and April next year. That means I better find the money now to be ready to pay those invoices when that stuff starts coming in. Yeah. That's right. So cash flow predictions are important. And if your staffing needs are telling you don't have to hire a lot of extra help through the holidays, then that means you don't need to have some money ready to pay them, because they want money. Forecasting your risk are important. Every business has a lot of risk. Yours and mine will. So we need to list down those risks. Remember, we did that with our business plan. We need to list them down. So we have now forecasting the risk, and now it's time to forecast the remedy to the risk. Who's going to be best qualified to help you manage particular risk? I'll tell you, first of all, we can pass the buck to your independent insurance agent that's helping you with your business, because that's what insurance is all about, is risk management. And every business insurance agent that's selling small business insurance has computer software, and their companies provide it to them, that if you plug in the type of business that you're doing, whatever it is, from a business like a tech business like a Madison's to making candles like crystals, an insurance agent will have a category that will bring up the different risks that may be involved with your business. Why? Because that's what they do. They will judge the amount of your premium based on how well you're managing the particular risk in your business. Now, they'll give you an opening premium when you first do business. Let's say it's $2,000 a year. But in just a few months now, about 6 or 7 months, they will send a risk management agent to you to see how you're managing the various risks in your business. And if you're doing a great job, you might get a premium reduction. But if you're slacking on some of these things that's important to your business, you're going to get a premium increase. So they're always pretty reasonable with that first year's premium. But I want you to know there's a hereafter with that. They will come around and check and see how you're doing with your different risks. What's a good way to kind of dodge the bullet on this? Is simply to be here tonight, to talk to someone that's been there and done that, take it to the next step, actually have that conversation on what's some do's and don'ts with your business. Like, I've been in a lot of business, I can help you with some, but if you were asking about some others, I'd say we need to find someone that's been there and done that, that's got gray hair like old Papa Steve-O's got here, that you can trust what they say to you. Yeah, find someone that's been there and done that to help you avoid risk. Holy moly, here we go. Don't know how I did that. What are the changes in the market? What are the marketing strategies that we need to work with? That's the goals of forecasting. Forecasting is helping us have the right product, being the right size and the right quality and the right size of it, to bring it in that we've bought it at a price that we can sell it at the highest possible retail price. Notice I didn't say that so that we can sell it at the lowest possible retail price. I want us to have it to sell it at the highest possible retail price. Because remember when we did our pricing exercises last week, we want our tag, our advertised sale price, to be as high as it can be in the market and be reasonable. But we want to pay the lowest amount possible to give us the most margin. Remember what we're doing here? We're buying below fair market value so we can sell above fair market value, and that difference in there is our potential margin. We do that by forecasting in advance and doing our negotiating before we start buying something. And that word has just creeped into our conversation tonight. Negotiating and closing deals. We'll talk a little bit about it tonight, and next week we'll go into it in more depth. But negotiating is so important. The key factor for you to own professional negotiating skills is tied directly to forecasting, because you can forecast how a negotiation will go based on what you're going to learn in just a few minutes. You can have your total targeting preparation done. Madison, this is a big deal for you. You're going to be entering some large negotiations, and so I've learned through the years that forecasting how that may go, practicing it, talking with some other people that's been there and done that is a critical factor with, at the end of the day, coming out a winner. The pricing goals, the terms, the concessions that you make are huge, but all this is about total preparation. So this little subnote here is forecasting successful negotiation. That's a goal that we all want to have. I can tell you that I've gotten pretty good at it. I don't get them all, But when it comes down to nitty-gritty, we can hold our own at carverequipment.com. That includes your introductions and your seating and your positioning. So how you introduce yourself to your potential negotiating partners. And so here's where I'll put this in. Heretofore, you may have said that someone that you're negotiating with is kind of like, not like an enemy, but they're not your buddy, because it's a give and take. You're taking from them, and they're taking from you, and they're getting the best deal they can do, and they're not really worried about your position. Let's change that way of thinking. Let's put a new thinking process on this and put it this way now. When you're in business, you're working with other parties and their relationships. And when you're buying and selling and contracting, those people across the table from you are not your enemies. They're your negotiating partners. Partner with a capital P. Yeah, a good thing. Because you want them there, and they want you on the other side, because both of you have something that the other side wants. So if you think about them as partners instead of a foe or an enemy or a competitor, it brings a whole different light on the subject. So seating, for an example, if you're walking into a room and you have a chance to sit on one side of the table across from your negotiating partner, let's just say it's the two of you, and you choose to sit across the table over here so you can look each other in the eye, which is the natural thing to do, you will be disadvantaged versus if you can find a comfortable way to sit beside of them or put them at the head of the table and you sit at the front corner. The closer you are, reasonably, and not being across is important, because when you're sitting beside of them or next to them, then you can say, look here, I'm on the same side you are. And it kind of brings a smile to your face when you say that, but there's a reality there. Because if you set up directly across from them as if it's like a football team facing each other in conflict, you're disadvantaged versus sitting closer or beside them or on the corner in that talking. So your seating positions are really important. Your introductions are important. Right from the get-go, you want to start introducing words as negotiating partners. I'm looking forward for us finding a win-win situation. You start planting the seeds. You start planting the seeds of goodwill, and both sides feeling good at the end of the day, and your chances to end up that way will be a lot better off. Your documents need to be a work of art. Well prepared, well drawn out, all the numbers done, right down to the bottom line, ready to sign it. How you do that preparation is critical, because that's where you have written down the things that you know that are important, so you can highlight them. Highlight your strong suits and things like that. So make sure that what you're bringing to the table looks good. Having a list of frequently answered questions is a secret weapon that is incredibly powerful. While you're thinking about this negotiation you're entering several days ahead of time, go ahead right now and start writing down the questions that they are probably going to ask you. You might even have some practice sessions with another employee. And write down the questions they'll probably ask you, and then you write down a really good answer that fully answers the question and shows how diligent you've been in your due diligence. So you're saying to them, I am the best qualified to serve you, and you can trust me. You don't have to have anxiety about what I'm saying to you, because we do our homework, and we're prepared to give you good trust. The frequently asked questions, remember now, you'll be able to use these for years, time after time in future negotiations. So go ahead and start it now, and for years, it'll be a great tool for you. You know what your bottom dollar is, probably, what that low dollar is that you can take, or the maximum that you can spend. Everybody knew that. But what makes the professional negotiator be a winner is they've already know in their own mind what the range is, the range of negotiation. If I start out here, they will probably counter offer here. and then I can counteroffer there, and then their counteroffer hopefully will be exactly where we need to be to close the deal. In order to let that logic go all the way, and we'll have some lessons later on in the next course that show you how to do this, you need to have that range where you're going to start at so you'll know where you're going to finish at. That is what we call forecasting a successful negotiation. People that are really good at negotiating and get the big deals and keep working with the same customers year after year, this is how they do it. Because your negotiating partners, if they're pros, they've done the same thing. And that makes the flow, the give and take, stay positive, and also helps both people find common ground. Remember, that's the objective of both sides. If the objective to one side is to beat one person down to the lowest possible thing, and sometimes that's exactly what's happening, the other person don't want you to make any money or don't care if you make any money because their job depends on getting the very cheapest price they can. Well, you're still going to be the professional. You still got your range, and you'll be more prepared to take them on and end up with a good deal if you've done your preparation. Even if they're looking at you as the enemy, you need to still be forecasting them as a negotiating partner. You will seem less dangerous to them, even though you've got secret weapons to lower that you're ready to pull out of your bag. Let's keep that in mind. The roadmap will become really important. And I love to give the seminars where I go through all the processes. And in your handouts, I've given y'all some examples of that. We're not going to talk about them tonight, but we will in some lessons in the next course. Your main secret weapon to help you win a negotiation and do a win-win deal, to help customers want to pay you more than they would someone else for the same thing, is your value-added features. What are you adding to the deal? What are you bringing to the table that your competitors are not, which makes your product and your presentation more valuable? Value-added deals. Maybe it's that list of frequently asked questions. Maybe it's a little extra service thing that you're doing. It might be a much better delivery time. It might be I can do business now with a small deposit. I've got a payment plan. Your competitors probably don't have all the things that you do, or if they do, they don't think about bringing them to the top of the table, of course, unless they've been in one of our seminars here. So you would want to list your value-added features right away. Lisa did a good job in her mission statements. As a matter of fact, all of you who did the mission statements gave a little testimonial to your promise and your vision is where you kind of highlight the value added that you're bringing in there too. That's a good place to do it in close service with confidence and trust, building integrity. Those kind of things, those buzzwords are really important. Those core values are a good place that you would start introducing right here on your value-added secret weapons. Might be your mission statement. It might be your vision statement. That will rock the customer's tree because they're not used to seeing that kind of thing. Now, getting ready to actually capture the moment. You've done your homework and you've done things, but now I've got to say to you, it's going to boil down to you and your personal closing skills. Next week we'll get into them right down to the nitty-gritty on this, but be thinking about this. This is those nonverbal communication, being able to read them and being able to send them. Really, really important. Using gestures and doing things, but sometimes you just got to bring the drama. Sometimes you got to get right up close and talk real low. Speak real low, so they really have to pay attention to hear what you're saying. Or you might use some examples or just silence. Silent period of time is a strong and powerful negotiating tool. knowing how just to be quiet, because what happens then, those anxieties that people have, they have a chance to take a breath, and when they breathe back in, you've got 100% of their attention to move on and start closing the deal. Move on and start closing the deal. Next week I'll show you how to do that. So build a little suspense into your presentations. Pause, capture a moment, lower your voice down, hold their attention even more. Now, in negotiating, having a second choice, a plan B, is a critical ingredient. If you know you've got X number of dollars to spend, and let's say you're buying here, you're buying something, it's good for you to go find a product at a price that you can afford. If you've negotiated down, got a good deal on it, and it will serve your needs. Well, now a lot of people will just say, well, I'm going to buy it because I don't have time for anything else. I'm busy. The professional negotiation would have started ahead of time so they didn't find themselves in that time crunch. And once you find that plan B, that's something you can buy today for a certain value, listen to me, now is the time to start shopping. Now is the time to start negotiating, because you have found something that'll do your work for X number of dollars. Now let's go out and find some other items just as good or better, and the offers that you make will be lower than plan B, because you're trying to improve your position. Follow me? So if you can go out and buy a deal for $2,000, a truck that will do your job, and it's good and dependable, got everything in it you wanted, then it's time to go continue shopping, and the offers that you, no matter what they're asking for it, the offers that you're going to make for that plan B is going to be less than $2,000. It might even be $1,000, because let me tell you right now, there are a lot of things out there for sale that the business person selling them have marked up 2 or 3 times. Remember the 3 times rule? And maybe they've got this high price tag on it, but indeed they're able to take, instead of $3,000, they're able to take $1,000 for it. You don't know that until you start making some offers. Just keep that in mind. The advertised sale price on your products from now on is not going to be your bottom dollar. So negotiating now, it's up to you to try to save all the money you can by negotiating down to the best price you can find. Okay? Plan B. Yes, if, no, but advertising or negotiating. I wrote a book here. This is the cover of it. It's available at Amazon for a few dollars, $2 or $3. But what it's all about is keeping the conversation going. If you feel like that you can do a deal with this person and they're interested in it and you got a good chance of selling it and you're after it, I mean you're after it, you want the deal, you will keep them talking. And the way you keep talking is to never say no or heck no, I can't do that. You might as well leave and go away. Well, how do you not take someone up at their offer without saying no? You say yes if or no but. Yes, I appreciate you making me that offer for $5,000. Matter of fact, it's the best offer I've had today. $5,000 is your offer. And yes, I can take that offer if I don't have to throw in that trailer and that extra case of parts that you were asking for. So I've said, yes, I can take you up on your offer, but then I came right behind it with the word if and gave the conditions that we would need to negotiate to for me to be able to do it. Well, first of all, your negotiating partner appreciated the fact that you said yes. Even though you hadn't closed the deal here, but you did say yes. That's an important factor. If it came across in such a way that you might need to say, your offer of $5,000 is appreciated. You always express appreciation for an offer. It's appreciated. No, I am so sorry, but I'm saying I really want it, but no, I'm so sorry. I just can't do that. I don't have that much money to do it. But, so it was no, but if I don't have to include all these spare parts, we can do the deal. That's the way it works. And we can go on and on and on, because eventually, as a good negotiator, you're going to be able to talk about your value-added items. You're going to be able to talk about things that aren't about the cash price, or about deposits or delivery or a package deal. A lot of negotiating factors you can pull in here to help the conversation going, that you will end up getting the deal, instead of just saying, no, I can't do that, take it or leave it. Now, my friends, you've been with me now for 6 weeks. And I have just shown you the example of how take it or leave it makes your customers leave it and go somewhere else to spend their money. And if you're using yes, if, and no, but negotiating tactics, instead of take it or leave it, you're going to see your bills or your sales just mushroom and explode in a positive way. It really makes a world of difference. Yes, if, no, but. There's 4 fundamentals in negotiating. 1, you don't want to give anything up unless you get something in return. In other words, there's a balance here. You went in with a forecast to keep things balanced, a win-win situation. They get a good value, you get a good return. So if they want something from you that makes your side go down, you need to say, well, I can do that. Yes, I can do it if, and then you make a negotiation that brings it back into balance. So never give up anything unless you get something in return. Number 2, make them, if possible, position yourself so that they will make the first offer. If someone's making an offer, I want to tell you the negotiations have begun. And that's a very positive step. That's why that when we're doing our advertised sale price, or the dollar value when we're selling something that we're putting out there, we're always going to plan to negotiate from that higher figure, because the first offer they make is going to be less than that advertised sale price. I'll guarantee you. So you follow my logic? By using our advertised sale price up higher, it gives you room to negotiate. So get them to make that first offer, and as soon as they do, before you even got there, you forecasted what their offer was going to be. If your negotiated sale price is $12,500, I'll tell you that their first offer is probably going to be in the $9,000 or $10,000 range, because that's what I want yours to be. And you already know that in advance. So wherever they come in at, you've got in your mind what you need to counter at. In other words, to bring their next offer closer to your figure that you can do business. Okay? Always, when you're buying, always, when it's ask for the price, and then you immediately, as soon as they give it to me, say, oh my gracious, is that your very best price, or is that your advertised big price? You see, you know what they're doing because I've just taught you. And the way you counteract that is from square one, as soon as they gave you that advertised sale price, you automatically just say, well, is that your best price? And most inexperienced negotiators say, well, I can trim on that, because you don't push them on to see what that bottom dollar is, right? You want to keep getting them down on that price without you making an offer. Okay? Now, on the other side of the fence, if you're the person on the other side of the fence and someone says, well, is that your best price? Then I would say, listen, that's a very reasonable price. For what we're offering, that is a very good price. I've got a little room on it. What's your offer? What can you write a check for today? See the difference in the approach? I didn't let him trick me into going down and making a concession without getting something. As long as they're making offers, you can negotiate with them. But if they're just asking you to come down off that advertised price without making you an offer, no matter how low it is, that's a good thing. So keep that in mind. But I want you to, when you're buying, is to ask, is that your best price? Do a pour mouthing effect. A pour mouthing effect is like my friends in Sampson County that used to come to buy farm equipment from me. They were the best pour mouthers I ever seen. They'd say, oh, Mr. Steve, I can't pay that for it. I can't even finance a 6-pack of beer, much less buy that tractor as much as you're asking for it. Can't you come down on that? I mean, your neighbors over there are selling tractors a whole lot less money than that. Practice that. That is a good thing to do, is to ask that salesperson, come on down with that price without making an offer yourself. Number 3, do not close, do not stop the process. Getting right back to what we were saying a few seconds ago, use yes, if, and no but to keep them talking, to keep hope, and to close the deal. Now, a little footnote, caveat here. You're a small, independent business person, and you got a lot of freedom, and you deserve it. And I'll say to you right now, there are some people that you don't want to do business with. There are some people you cannot satisfy. There are some people that do not care whether you make $1 or not. As a matter of fact, they kind of even hope you lose money doing business with them, because their concern is that almighty dollar. Has no concern for you whatsoever. And if you determine that you can do without this person, pat yourself on the back. That's part of the joy and privilege of being a business owner. Because if you get all the business, you're going to get all the bad business. And you're better off without some of it. So learn to read those customers as early on as possible and make the determination, and it's okay. But as long as there's a way you can keep your cash flow going and you want that business, don't you be the one to close the deal. Don't you be the one that says take it or leave it. Now, if you were in India or Arabia or Japan or Russia or Wall Street, USA, there's a certain number of tactics employees that are used in negotiating. Matter of fact, there's 21 to 24 of them. I mix it up sometime. And one of your handouts lists them all. And you'll find it to be very interesting reading. As a matter of fact, when we do our special seminar strictly on negotiating, we'll get into them deeply. But tonight, we just got time to talk about 9 of them. So I don't use the 9 that are being used the most in the market today. The first one is new, and it's really not even in the books yet, because real estate people have started using it recently, and it's starting to be kind of a thing. I call it burst the bubble tactic. An example of that is, let's say that we're selling an apartment or a home for $200,000. We got it on the market for $200,000. And today I get a call from my real estate agent, and he says, Steve, I got a call from another agent today, and they said they have a client that would really like to buy that property, but they're not going to be able to pay anywhere close to as much money as you're asking for. And they're just asking, are they wasting their time to make an offer that's really quite a bit below what you're asking for it? Well, that sounds like a reasonable thing to ask, doesn't it? Because they don't want to waste their time if I'm not going to take something low. So what does my answer need to be? Absolutely. Tell them to put that offer together and send it on in. Send it on in. You want the offers to come. And that tactic that they were using was conditioning me to get a real low offer so that I might take it. But it was getting my mind conditioned to consider a real low offer. Well, I'm going to consider the offer no matter what, and you will too. But you're not going to let that tactic automatically help you take that offer, because they may pay a whole lot more than the offer, and there is a chance that you'll be able to take a whole lot less because they don't know what your bottom dollar is yet. You figure that out well in advance, and they don't know. But they're making that low ball offer based on something way lower than what you had to price at. I'll guarantee you that if your price had been lower, their offer would have been lower. Okay? Just keep that in mind. Flinching. Flinching is a negotiation tactic that was best shown to the world by Fred Sanford. Remember the show Sanford and Son? if a friend was out buying, negotiating for something, somebody make him a price, he'd go, "Oh my God, here comes the big one. Oh, that's so high, it hurts." Oh, and he would just fall down and look like he would have to have help, have to go to the hospital because somebody's price was so out of line. That's called a flinch. Well, you don't need to carry it to that degree, but a flinch is a real good negotiating tool because it can be used so effectively and it doesn't cost you a penny to use it. So someone gives you that price and you just might say, "Oh, you just do your eyes or your arms or your hands or do like this." And ladies like to put their hands up here like it gave them a headache, or shake their head, put their head way down like that. Don't say a word sometimes, or maybe just a grunt. And here's what will happen. An inexperienced negotiator will automatically say, "Well, maybe I can do a little better than that. I'd come off $500. Would that make you feel better?" You got to have the drama. You got to play it. That's called flinching. Silence, easier and just as effective. Someone gives you the price, you just look at them. Take your glasses off and just look around. That's a sign of disappointment, but I'm not saying anything. I'm just, and you don't say anything until the other person talks, because there is an excellent chance, again, with an inexperienced negotiator, they'll say, "Well, what do you think? You know, take me up on that offer?" And I'm probably just going to shake my head real slow and never say anything. And there is an excellent chance, my friend, that the next words out of their mouth will be making you a lower offer, and it didn't cost you a penny. You just sit there and you were quiet. Silence is very powerful. More powerful with an excited young salesperson. A professional salesperson, like me or you, someone pulled that trick on us and they just sit there and don't say anything or do the flinching. The other side of this is I want you to look them right in the eye and say, "Oh man, that was the best flinch I have ever seen." Or, "Wow, that's a good silent treatment you're giving me. I've never seen one any better." Once the other person understands that you know what they're doing and the cat's out of the bag, that they're using negotiating ploys on you, the deal's pretty much set. Your relationship is improved because you got more respect for each other, and you can move on with the negotiation a lot better because that stuff will fade away. You get right down to trying to find a win-win situation. A good thing to use now, especially in inflationary times, and I'm using it every day with my customers, is saying, "Look, we need to do this deal today. The look and the hook. The look is a good price. The hook is we need to do this deal today because prices are going up. Now, I'll guarantee this deal today if you'll pay me a $100 deposit right now. I'll go ahead and take your order with a $100 deposit. When it comes in, you got price protection." That's really powerful today, and I suggest that you use it. Red herring, been used forever. Now, red herring is when that used car salesman is standing, leaning against this pretty car, and he's pointing out those brand new tires back there, and that new windshield here, and how clean the paint job is, and look at the engine, doesn't it look nice? He's pointing out all these things that look good while he's leaning against a dent in the fender, or a flaw in the paint job, or a slick tire. So the red herring is when the person doing the selling is doing all they can do to point your attention to the good things so you don't pay attention to the bad things. And that can take in a whole wide world of possibilities, but that's what the red herring is. Retreating to a higher authority is something that people use all the time, and if you're a salesperson, that's the one that comes in and negotiates hard with you, and you think you've got a deal, and then just when you think you're going to close the deal, they say to you, "Well, all this looks really good, but I need to go talk to my daddy to see if he'll do the deal. Or I need to go talk to my wife. Or I need to see if my partner will go along with this. Or I need to see if I can borrow the money." All these other excuses while he can't close the deal that y'all just negotiated. He is referring to a higher authority. So how do you fight that? And you can do that too. Because I'll guarantee you when they come back, or when you come back after you've talked to your higher authority, the offer you're going to make is lower than the one you left on the table. That's why you did it. How do you fight that? When you're entering into a negotiation with someone, one of the first things you want to cover is to get that off the table. And you do it by saying, now look, I'm here to do a deal today. If I get the price down exactly where you need it, can you sign off, and do you have the authority to do the deal? Or you don't have to go talk to somebody? And people will tell you. I don't think I've ever had anybody lie to me about that. They'll say, yeah, I can do the deal today. Or I really may have to make a phone call or to go see my wife, or it'll be a couple of days before the committee can come up with an answer. Well, that's okay. That's negotiating, or it may be just the facts. But you want to remember that so that you don't always never go to your very bottom line, and let them leave with it, because when they come back, they're going to make you an offer lower than that bottom line, and you won't be able to do your deal. So you would say to them, look, until you're ready to sign a check, this is where I need to be. I'll look forward to hearing what your committee has to say, and we'll pick it up the next time. But don't leave yourself in for a hanging, because that's what you can do. Splitting the difference is when you do all you can to find common ground with the other side. But splitting the difference can be a game. Have you heard that? Have you ever done some buying and selling when you say, well, you're here and I'm there, we can maybe meet in the middle, split the difference? Or what can we do to find common ground? In bigger ticket items, when you're seriously negotiating, that's a good ploy to use, and we do it all the time. So that would normally mean that, okay, Beth, you're at $75, and Patrice is at $125. Well, y'all could easily say, well, if y'all met in the middle at 100, both of you should be able to be happy and go ahead and do the deal. And sometimes that's okay. But remember that we are here to make as much profit as we can, and we've got our guidelines trying to go, and we're just not going to automatically give up a large margin or part of our margin. So how would we do that? Well, let's have an example here. Lisa is at $1,000, and that's what she wants. She's selling something for $1,000, and Crystal has offered $500. So Lisa's trying to sell it, and she don't want to tell Lisa that she will consider that $500, but Lisa will use terms like, man, I really need this $1,000, but I appreciate your $500 offer. Good gracious, I really wish we could get together here on this thing. And she's really encouraging Crystal to say, well, maybe we could meet in the middle. Maybe we could meet in the middle. Well, Crystal finally comes around and she says it. Maybe we can meet in the middle. Well, something big just happened, because the very minute that someone indicates a willingness to split the difference, to meet in the middle, to find common ground, they have played that I want to do the deal card. So the selling part of this negotiation will know that my chances have just improved. I need to move towards closing this deal because she just gave me a buying signal. But Lisa would say, oh man, I really need $1,000. Crystal, you're so kind with that $500 offer. So you're saying that you would move your offer up to $750? You move your offer up to $750, and Crystal say, yeah, that's halfway. Yeah, $750. Well, Lisa then would say, wow, I really need $1,000. And Crystal, you're at $750 now, right? Crystal say, yeah, I'm at $750. Lisa say, well, maybe we could find common ground at $850. Now, because Crystal has already indicated she wants to do the deal, she is very likely to say, okay, and never realize that you just bumped your money up another 10 or 15% by splitting the difference twice. Now, is that crooked? No. Is it fun? Yeah. Is it pulling the wool over someone's eyes? Maybe. Is it good business? You're darn right it is. As long as it's done right and you're not being unethical about it and having fun with it. Because remember, once the two parties start talking about splitting the difference, it becomes a game of chess right then. And Lisa, by being coy and astute, you can improve your situation by splitting the difference twice. You didn't do anything wrong. You didn't say anything wrong. You were just a better negotiator. Show me the cash. People will move mountains to get cash in their hand. So if you're going to negotiate and you can bring a cash with you or a check written out for the amount of money that you're offering, sometimes you can negotiate all day long, but then you say, okay, Denisha, you want $1,000, but I got $700 right here, cash money. Take it or leave it. I'm ready to do business, ready to walk. Now remember, I said take it or leave it there because you don't play that hand until you're ready to mean it. But even though I said take it or leave it, Denisha has the right to say, you know, I really want that $750, and yes, I'll do that deal if, if, or no but. You can always keep talking and you find a way to keep negotiating for everybody to be happy. Lastly, the most prevalent negotiating ploy that people use, that you can use and it's used on you, is the task of nibbling. Nibbling is when we do a deal like we're going to buy a car. And we said, okay, we're going to do the deal and this is the amount of money. And while the salesman goes off and gets the paperwork done, I'm sitting here talking to him, or he sent somebody to do it and say, now you did say we were going to get that new set of tires, right? And you did mention that those floor mats, I want them in there, and that radio with that Cyrus deal on it, and free oil and gas for 2 or 3 months or years. I really appreciate you throwing all that stuff in. And I don't keep nibbling and throwing stuff in until they stop me. Because if you're smart about it, you can keep getting free stuff. Keep nibbling a little bit at a time and end up and enhance your deal a whole lot. And people do that all the time. Free delivery, no tax, assembly free, all these little things that were your negotiating tools in that big ticket sale, they're wiping them out in a heartbeat. So how do you fight that as the salesperson? First, you negotiate your deal. And remember I said, it's a work of art. You've got all your numbers already figured out. You don't write down the bottom line you've agreed on. And when you do that, you have them to sign it right there. We've agreed at $1,000. And how about just initialing there, Steve, and draw a circle around initials, and I'll initial it right there. Then you take it back to the finance people. And then when the nibbling starts, you say, well, sure, Tisha, I can add that on there, but and I'll do it for what it costs me. That'll add $250. Or, no, I can't do that, but if you'll let me add my cost on it, I can do that. So once you have that dollar figured down and both people have initialed it, everything after that is all about yes, if. Yes, I'll do it for you, but you got to ante up some more. Because remember the balance? You had a good deal, you signed off on it, but then they start nibbling, and their part of the deal goes way up and yours goes way down. Your profits go way down. So you got to have a way to fight that. And you take these little tactics day after day, week after month, year after year, it adds up to a huge amount of profit and loss. So you have to be on your guard about it. And as you're training people, you need to make sure that they're aware of it as well. Now, there's 12 more of these in your handout. And when we do, in a few weeks, we'll do a special webinar just on negotiating and just on forecasting. We'll get into it even deeper and a lot more fun. It is a lot of fun. Now, in negotiating, you negotiate and you forecast and you negotiate till you're up to the point that the person's ready to buy. And when they start sending you buying signals, it's time for you to stop negotiating and start selling. And what are the buying signals? They start assuming ownership with what they say. Remember these nonverbal communications, some of it, or what they show or how they act. They talk about how you don't deliver it. What's the deal on delivery? Let's talk about this little detail because I'm really concerned about that when I get it. Wow, I don't have to wait a week before you can bring it. Those are buying signals, and you want to recognize those because you'll change you'll stop selling and start closing. Stop selling and start closing when they give you buying signals. They're really important. And then once you close the deal, add that deal closing, and I'll get right into that next week, the bottom line on how to close that deal. But once you've closed the deal, it's time to wrap it up. You don't hang around and celebrate. You wrap it up, you collect your signatures, you congratulate them. This is the rule now. You congratulate them on what a great negotiator they are and how, by golly, you hope they'll let you come back and try some other day on another deal to get some money back. In other words, you are saying to them they have out-negotiated you. It's important that they know in their mind it was a win-win deal, but I came out on top. I got the better deal. Steve gave me a better discount than he'd give anybody else. It's important they believe that. And you've got to sell it. Why? Because a raving fan customer will send other people to you if he thinks he's sending his friends and family to get a good deal. If he's sending his friends and family to someone that will work with them and help them get a good deal. Really important part of your sustainability and creating raving fan customers is how you act right after you close a deal, the message you send to them. And then, shut up, hush, zip it, get your bag and get on out of there. Leave as soon as you can. You celebrate out in the parking lot away from someone. You never, ever talk about how you were a great negotiator, such as that. We're running close on time now, but I want to tell you that all this can be boiled down and marinated into you becoming a really cool and comfortable negotiator. And I've seen some great ones through the years. A picture here of a gentleman that reminds me of a farmer customer in Sampson County, and we'll just call him Mr. Ball. That was his first name, B-A-L-L. And he drove to town on an old green Chevrolet pickup that looks just like that one, and wore coveralls, and just a nice fella. He bought Alice Chalmers tractors, which was our brand, and he had a different tractor for each implement. Most farmers have one tractor and have a lot of implements. Mr. Ball had a lot of tractors, and each one had his own implement. And he didn't wear them out. He kept them nice and polished. And his used tractors were always worth more than anybody else. So we were really glad to have Mr. Honeycutt as a 40-year customer. He was a good friend of my daddy's, and after my dad passed, he did business with me. But what was his legacy? He had the legacy of a great negotiator, and that's what I want you to have. Negotiating on getting new jobs, on contracts, on selling products, on being a great travel agent, a great candle maker and seller of thousands of candles. Be a great negotiator, and people will want to keep doing business with you. Be serious. Have the money to back up your offers. Be 100% trustworthy. When you speak clearly. Think about what you're going to say. Don't have a lot of loose conversation. Listen to what the other people say. Establish a history with your people. It's important that you have a continuing relationship with your vendors. Maybe one vendor is a little bit more money than the other, but on a lot of things they're a lot less money. When you can create a good buying relationship in the long term, when things are tough, it's those relationships with vendors that will see you through. Either number one, they'll give you better deals, or number two, they will extend credit to you when you need it. So try to maintain a good group of vendors when you're negotiating. And always remember first names, remember personalities, because those individuals are the ones that's going to give you the best deals. So there you go. 8 o'clock right on the money. Let me tell you that it has been a pleasure to work with you tonight. Appreciate you staying with us. I hope you got a lot out of this. If you want to watch it again tomorrow night, we'll be back on board tomorrow night, same time, doing the same thing. And then next week, again, required for your certificates and diplomas, we'll be talking about the basics of taxes, a little bit of record keeping, a little bit of depreciation, and a whole lot about closing sales. Now, for the next 3 or 4 weeks, there'll be a lot of opportunities for you to have visit webinars talking about taxes, depreciation, these things, 4 or 5. So main thing is that you come to the one next week to get to qualify you for your diplomas and such as that. You're welcome to come to all of them. So I would invite you to turn your cameras and your microphones on, and we'll talk if you'd like before I turn you loose. Thank you very much. Okay. Okay, Patrice, you ready to start negotiating some travel?
Of course.
Okay, that's good. Now you'll use in your negotiating, you'll have all these options that you can let your customers pick and choose, and by doing that, they'll be negotiating their own price by what they add and subtract, and that would be what you can do with the value added segment, that you will have more offers than other people do, and be willing to work it out. That's a big deal.
Yes, sir.
Great. Crystal, how about that? Did you pick up some stuff on negotiating tonight? You may not have your mic on. How about it, Crystal? Can you hear us? All right. Tisha, I'm glad to see you on board with us tonight. I hope things are well with you.
Yes, everything's well. This was really great. I enjoyed it.
Very good. If you want a double dose, come back tomorrow night. We'll be glad to have you. We'll be glad to. Good deal. And Denisha, I hope you picked up some stuff that'll be helpful for you.
I did actually. I really appreciate the presentation tonight.
Very good. Well, thank you for being with us. Thank you all. Send me any notes or emails. Now listen, I want to see some business cards, some videos, some profit centers, some mission and vision statements. It's time to get down out of the stands and get on the ball field, and let's get these businesses rolling. God bless you all. Our prayers are with you, and I hope your family and yourself have a great weekend and a great week. Good night, everybody.
Good night.